Hi, this is Dave with Market Trading Concepts. It's Saturday, March the 24th, closing out the week for Friday, March the 23rd. This is going to be a short video this week, getting ready for a presentation to our Burlington meetup group called Introduction to Technical Analysis and Chart Reading, a Practical Perspective. So this is going to be a sort of technical analysis and chart reading 101 for some of our members based on some of the feedback that we've received from them, and it's designed to kind of look at the markets, not so much the markets, but just markets in general, regardless of which market's being traded or which market's being looked at and analyzed, just to be able to understand, some basic chart reading skills and some, ground level basic technical analysis indicators. So it's designed to be a good starting point. So we hope to see you all out there, and we'll look forward to discussing further tomorrow, Sunday the 25th. So we'll look forward to seeing you there. So we're just going to take a look at a couple of instruments. As mentioned, we'll start out with the Dow futures. The Dow futures are, in my opinion, still long side basis. So what I mean by that is we had this this candle here, which closed more than 50% off of the highs, and was a signal, we mentioned in our video last week, was a signal of a potential pullback. So we did get that pullback, obviously. You can see the next day was a doji on the day, and we did pull back. Now, where it got a little bit strange, not so much strange, but we didn't really, we hit the 20 period moving average, and once we hit the 21 period moving average in here, what ended up happening was we didn't really get much of a bounce on Thursday. So it kind of, it came down here, it bounced a little bit, and then the next day, on Friday, what ended up happening was it kind of slipped through the 21 period moving average down to this level at about 12,933-ish. So that level here, this level here coincided with this price congestion area, these price highs where you can see, the opens and closes of these candlestick bars, not so much the wicks, although, the wicks do kind of come into play in that general area. But this area here, this price congestion and these highs here, you can see that the price came down and it tested these levels and it held. Okay, so that's this level in and around here. And then what happened was on Friday, close to the end of the day, in the morning you had a sell-off, and then you can see this, you can see that it closed more than 50% off of its lows, and it closed close to the highs of the range of the day. So that's fairly bullish, but that's not the kind of action that we've really seen here with this market. This market has been really resilient, and it's been holding up really well. But if we go back a little bit, you can see, this day here, when we had this pullback, what you can see what happened was it did kind of meander there and hold, and then the next day, it jumped up quite a bit. So, in these days here, we're met with a little bit more buying conviction. So I think we're still, in my opinion, we're still long side on the indexes, but you just have to be careful. What you really want to see for strength to come back into the market, right? Because you had this big, when we push through these highs, you can see this huge candle and this huge, buying conviction, which was probably precipitated by some news. But you can see that, we really need to get above, this day here. We need to get above this day here. We need to push back through to the upside to see some real buying conviction. So I don't think I'd really want to be if I was not long right now, if I was not long the market, I really want to see like I'd really want to see the price come above here and close above here and look for a continuation to put in a new swing high. So at this point here, we are holding, we are still bullish, but if it just feels like when you watch the market intraday, it just feels like the market's losing a little bit of its mojo. You know, it's still long side. I mean, we don't have any closes below the 21 period moving average. You can see here, even though we slipped through it, we still on both days closed, you know, above the 21 period moving average, right? So that's very bullish. What you'd really need to see, as I've mentioned in other videos, is some decisive closes below the 21 period moving average to start, you know, thinking about the short side. You know, you had one day over here where you closed decisively below it, but then the next day you closed near the highs. You know, so that wasn't really a reason to get all that excited on the short side. And as you can see, you know, the shorts got blown right out of that position. So just be cautious here on both the long side and the short side. And really what you'd want to see here is some movement above this level and some strength above this level to, you know, to really want to do anything. If we start doing a, you know, a situation like this where we, you know, we kind of probe above, but we don't get above that level, just be very cautious. Just be very cautious. Flat is also a position. Okay, and let's take a look at the markets from the you know, multi-time frame analysis and from the Darvis squeeze perspective. We still have this long signal intact on the weekly chart. On the Dow futures, you know, still at about 14,000. On the weekly chart, we held this 8-period exponential moving average here. So that's the 8 EMA. And then you can see here on the daily chart, which we already looked at, but from this perspective, which is a little bit different, you know, this breakout momentum perspective, you had this signal that fired here long at 12,994 with a, you know, projecting this out on a one-to-one basis, this Darvis box, and this Darvis squeeze about 13,297. So we didn't quite hit that, but we hit the target's basically been met. We've hit more than you know, 75% of the distance, and you know, it's not an exact target. It's just, you know, that's the potential that it could go based on that move. So this target's really been met. Now we're pulling back. You can see these price highs coincide with this breakout level, and you can see that we closed just above the breakout level. So this is, in my opinion, still a long side market. This is not unusual, you know, to do this where you've kind of come down, you've come back up, and you're really back at this level here, you know. So this is a key level. This is a key price congestion area where there's a lot of price activity, and you really need to hold this level and, you know, break this level and push higher. So that's really what I'm looking at. If it doesn't break this level and we start to get some consolidation in here, I'm going to be very, very cautious. Looking at the sister indexes now, you basically have the same situation. We closed on the weekly chart, doji on the week, and looking at the daily chart, you had the same situation on the S&P futures, where you had on the ES you had this, you know, this swing high, you put in this swing low here, and then once you broke above this, you can see the conviction, you know, when we broke above this swing high here on this long signal that printed at 1371 3/4, and then you can see here the target was basically hit, and now we're coming right back down. You can see the 21 EMA, you can see confluence between the 21 EMA and this breakout point of the box. So we really need to hold that level, and you can see we did have some accumulation, you know, in and around that level. So you know, it's just basically the same situation as the Dow. Everything seems to be in alignment there between the sister indexes, where you really want to see a break above this, like around 1400 level, above this, you know, above this high on that would have been Thursday, I guess. This candle here on Thursday, you want to see a break above that and a close above it, and see some kind of continuation to the high side, looking for potential targets around 1500. If it doesn't do that and we just start to go sideways again, then, you know, you're either going to wait for a new fresh, you know, Darvis squeeze signal, Darvis box signal to form, you know, a range into to print a new Darvas squeeze, or that could go both sides. It could go up or it could go down. So this level in and around here between 1371 on the ES and 1400 is a pretty crucial range. I truly believe that's kind of like a no trade zone, and you really want to get it active and interested above or below those areas, provided you have the proper signals when that happens. Taking a look now at the NQ or the Nasdaq futures, you still have this potential target in here of 2,888. It looks stronger. It looks stronger than the other indexes at this point in time, and you can see it's probably because of the crazy madness in Apple stock. But it's really strong. It's above its 8-period EMA nicely. You've got a nice, slope here on your moving averages, and you can see here it even held the 8-period exponential moving average on the daily chart. So that's looking a lot stronger than the other indexes. But all in all, we've pretty much a pullback to this level, to the top of these swing highs, and this breakout point, and where you have confluence between the 21 exponential moving average on the daily chart of the Nasdaq futures would probably be met with a nice little bounce, and you would expect that to happen pretty quickly. Now, the other market I wanted to have a look at today are the notes and the bonds. The 5-year, the 5-year on the daily chart looks interesting here because, as we discussed, it printed a short signal last week. The target was met. We went about twice the width of the box, and then you can see there, like, this is extended, and now we're getting a bounce. So I think any bounces up to this falling resistance here, this 21 EMA, can be, you probably could consider a potential short with a stop. If I were to do this trade, I would look at a short around the 21 exponential moving average with a stop just above this candle. Because if you actually get a close above this candle here, you're probably, all bets are, are off, and you're going to get a move much higher. But I think you can look at this as a decent stop level with a good risk to reward ratio. By the time this pushes up, this should be somewhere in and around this area. So you can see, you would expect a continuation at least to retest the lows. So that would provide a fairly decent risk to reward ratio. And I think if bonds are going to continue lower, you never know what's going to happen in the market, but if bonds are going to continue lower, you would expect that kind of action to take place, where it does one of these. So if you look at the weekly chart to try to find some confluence there in and around the levels, you can see the 21 EMA starting to roll over on the weekly chart, and you've got a level of about 122 in here. So that 122, I think, is a key level. You actually might want to look at, if I was going to take this trade, I actually might give it, a little bit more room for the stop in case you get a probe above there, or even consider maybe a close above this level as a stop. So, I think that's pretty, these levels here, 122, 122. I think you're, I think this is what's in play. Now, looking at the 10-year, you can see on the 10-year, the 10-year had an actual Darvas squeeze short on it fired a Darvas squeeze short signal on the weekly chart here with the break of that box, and this signal at about 130, and it already hit the target on the weekly. And you can see once it hit the target there, it pretty much held. So if you look at the daily chart, same situation here. The signals came in and around the same level, around 130, hit the target. Okay, now you're starting to see, some support in here, and you're starting to see it bounce. So I think you could look at the same type of situation for for the 10-year, where maybe you get a move, to this falling resistance at the 21 EMA, potential short opportunity, stop above, this signal here, stop above this candle. So somewhere up and around this area. So I think that provides a pretty decent risk to reward. You would, if you're going to get continuation, you would expect something like this to at least retest these lows. So I think that looks interesting as well on the 10-year, and it's also interesting to note that the 5 and 10-year are in alignment. So let's look at the long-term 30-year, and you have, the weekly chart isn't as decisive. You do have a break of this 21 period moving average on the weekly chart. You can see, it's the selling has kind of stopped for the time being, and you had on the daily chart here, you had a short signal at, I believe that's 139-ish. You didn't quite hit the one-to-one target at 134, and you're already bouncing. So I think, this falling resistance where it comes in, it might provide the same kind of opportunity, although the other two, the 5-year and the 10-year, seem a little bit trendier, like a little bit stronger to the downside. So, but I think you still got the same scenario in play here. You could look at a potential stop area above here. I mean, we're not really trying to provide advice here. These are just as learning opportunities, things that you can watch to see if this kind of stuff happens in the future. Are these the kind of setups that you could look at taking? Do these principles transcend different markets, different things? Because these are really just chart patterns, and what we look at in technical analysis is for chart patterns to kind of repeat themselves, and to to get decent risk reward ratios in there where these chart patterns do make sense, right? So looking at this, you could potentially look at, from a chart pattern perspective, you could look at, if I place the stop above this level here, and I was to go short here, what would happen? Would I get a continuation to hit this target or retest these lows? So the 30-year looks fairly in alignment with the 5 and the 10-year, and as I mentioned in my last video, this is something that you got to watch interest rates. This could be a real game changer for interest rates. So now, just jumping back in time to the 2-year from the 30, you can see that you did have a Darvis squeeze short here, and you're getting signs of accumulation in this weekly bar here. Target is down here at like 109-ish, but you're also getting the crossover in the 8 and the 21 exponential moving averages here. Now you're in a pretty elongated squeeze. This is still bullish, so this is still bullish, and it is against this movement here. But this could roll over. The daily is already rolled over. Okay, so the daily trend is already rolled over. This is below the 0 line on the MACD. You had this Darvis squeeze fire short somewhere back in there. Actually, I'm not even sure if we did have a Darvis squeeze short. Why don't I have Darvis boxes on here? I don't know. We did have a short squeeze though, and so that's interesting to note. But we are in a fairly established downtrend here. So I mean, you pretty much have alignment with the 2-year as well. Where you're below the 21 period moving average. This is as some people may know, this is my line in the sand between long and short. It's my LITS. It's kind of a strange acronym, but if you've got price action below the 21 exponential moving average, I definitely don't want to be long. A short bias on any time frame. So you're looking the weekly, short bias on the daily, and you can have short-term pops above it on the 60-minute, and you would wait for it to break it to reestablish on the 60-minute. So that's what I'm looking at there for the bonds. I'm going to take a look at two other instruments, and then wrap this up and get ready for tomorrow. Okay, so I wanted to take a look at the U.S. dollar and its inverse, the euro. So let's start with the U.S. dollar. Now we had this situation here where this level held. We thought it would push down to this kind of sloppy trend line here. But now what you have is, you see this, you've got this higher low in place. You have support, and then you don't really have much follow through though. If you see like this bar here, you probed above it, but then you close more than 50% off of the highs on this weekly bar here, and you're right back down into support. So what I'm looking at is a situation where I think this is in kind of no decision zone, But what you would really want to see is a close above this level here, okay? And I guess that's like 80 and 80 half. So you'd want to see a close above this level here for continuation to have a long bias on the US dollar. And you would want to see it retest these highs or put in new swing highs. Or what I'd want to see is, this continue to fail and to push lower into this kind of trend line area, which coincides with the bottom of, these lows here. So I think, the U.S. dollar's kind of in a funny situation. It'll become a little clearer when we look at the euro, because I did have a look at the euro, and you can see it a little bit more clearly there. But you've got some. I think this is fairly major resistance here, okay? And the failure of putting in a new high at this point in time, unless we actually do break above this level and move towards this high, I think you've got to look at either sideways action or potential, rollover action. So that said, let's have a look at the euro to see if we can find some more clarification. Okay, so here we have the euro. We are still short bias, but I'm going to change this to green because I think, it's still pretty early, but the daily chart's really not telling us too much except that, these lows weren't violated on the daily chart. Okay, so these lows weren't violated. We're now back above, we closed again above the 21 exponential moving average on the daily. So there's kind of a heads up. This went positive. This looks like it wants to go positive. We've got some bullish signals. We've got some bullish signals on the daily chart. Now, if you look at the weekly chart, I believe we mentioned last week, if memory serves me, you've got this key $1.30 level. Okay. Now, this is a level that you can see we've touched, and we've found some buyers at this level here and here. And this is a level that that Rob Hoffman of Trade the Markets and Power Charting has been looking at a lot in his trading room. I don't think I mentioned, but we did have an event with Rob. He came in and did a presentation just this Wednesday that passed for our members of our meetup group and the CSTA Oakville chapter and the CSTA in general, and it was a fantastic 2-hour presentation. If you haven't seen some of his work, it's really good. I've been following Rob for about 1.5 years now, and I've incorporated some of his concepts into my own work. And he's been looking at this $1.30 level, and I also, have been looking at it. He looks at the markets a little bit differently, and the way that I'm looking at this, I agree with him on this $1.30 level, absolutely. It is really a key level. Now, but from the weekly perspective, like what I'm looking at here is, you've got this lower high, right? And you've got these lower lows, right? And then you've got another lower high, and then you've got a lower low. So what I'm looking at here is, this to me is really early stage, but it looks like a potential lower high. Okay, it looks like a potential lower high. Now, I thought we were going to get something going to the upside here, but this is a pattern that I see often where you get one close above a key 21 period, let's say moving average on any chart time frame, and then it pulls back down, puts in a lower high, and then it blasts off. It's kind of like it puts in a stair step and that energy to jump off that stair and push higher. So what I'm actually looking at here is I'm looking at this as a potential on the weekly chart. Now, this is going to take some time to kind of unfold, but what I'm looking at is a potential lower high. As long as this 130 level holds, and we don't just go sideways, but potential lower high here at this $1.30 potential swing point, right? And then a push back above these highs. If we get a push back above these swing highs here, where this lower high is, then we have the potential to put in a, let me just erase that. Then we have the potential to put in a higher high. And what that means then is that we have the potential to start stair-stepping higher. So this is, I think, key in the euro. This is what I'm going to be watching. I think this is a little bit clearer than the picture on the US dollar chart, the inverse. But this to me this is a pattern that I've noticed quite often, where you could potentially have this and go. Now, if we get a break below this $1.30 level, like a decisive break, then we should really be looking at a retest of this $1.26 half level. Okay, if we get a clear break of that. Now, so basically, what am I saying? This is no decision zone. This is like just kind of watch and see what happens. But, you've got a lot of distance here. This is, a lot of area to trade in and above here. And this is a lot of area to trade in and above here. So just be patient, wait for it, see which way it unfolds. And I think once you break this level or break that level, you're going to have some interesting moves and some potential, new larger term trends and game changers setting up. So this is really what I'm watching. I think that, a lot of the currencies have been really quiet, and I think this is why. Because of the action between the euro and the US dollar. The other way you could look at this is, this is kind of like its own little Darvas box, and you really don't want to trade it until it breaks out of the bottom or the top, even though this isn't a Darvas box. This is the important range right here, okay? This is the important range. So I think that this is the reason why the other currencies and some of the other markets haven't really been super duper active. And I think that once we get something going here, I think we're going to get some good trading and some good volatility, hopefully tradable volatility back into the markets. So that's all I have today. I mean, we're still at 27 minutes for the video, but it's half as long as my other recent videos. So I hope that helps. Hope to see you all at the meetup tomorrow. And any questions, just drop me an email through the meetup group, or through our website link. So I'll link you over to that so that you know where we're at here. Okay, so this is us here. You can link over to us at meetup.com, burlington-investment-idea-meetup.com. So we hold regular monthly meetings on the last Sunday of each month. We have a good group of people that come out to have a look at what we're doing, and to also share ideas and network with other like-minded traders and investors. So this is us here. You can find me in the members, and you can just send me an email right through this site if you want to ask any questions or learn more. We look forward to seeing you. So good trading, good investing, and have a great rest of weekend.